Good morning, people. What is up? Whoa. CPI comes out, shakes things up super aggressively. Just grab a hole and just monkey around the market as we clean up a lot of the very fragile auctions left behind. And these situations where you have multiple days of just rotationary and big range action, and then Sunday you get this like monstrous move to the upside with a very weak volume push. Like you're subject to the potential of a little shakeout. Now, it did take news for that to happen, but the last few days, markets, although remained a little more bullish, had some fragile undertone to them. CPI comes out. You can see it here on the screen. We're looking at Financial Juice here, so shout out them, go check them out. And the main figures that everyone was expecting was inflation data this morning pre-market, along with inflation data tomorrow, PPI, a little less, I would say, volatile to a certain degree. And we had Jerome Powell on the wire yesterday, so a few things to talk about surrounding monetary policy and the expectations of it. So the US CPI, the year-over-year figure, 2.9% was expected, 3.0 comes out, so a slight increase from there. Hot inflation was somewhat expected to come through. You've got the US CPI month over month, which came out a lot hotter at 0.5% versus 0.3. And then the US core CPI, the year-over-year, decently hotter at 3.3 versus 3.1 expected. And then the U.S. core CPI, the month-over-month, 0.4 versus 0.3 expected. So hotter inflation figures, right? That puts a lot of downside pressure in current market conditions, where we saw this most recent swing to the downside pre-market. Tech got slapped around pretty aggressively. And this is day 2 of Powell's testimony that's coming out, which we should have eyes on. It's not just this data that's up and done, but we have a pretty gnarly gap here on the S&P after this data. We have very, very low volume on the way down for S&P and NASDAQ together, which, right, it does have the potential to get cleaned up. It's just that I think that prices can explore a little lower before we find any buy-side press. Right now, the momentum is to the downside, and we've seen a classic theme over the past few weeks where markets take this news, they sell it off, and then big-ass buyers come in to swing this thing back higher. So is this going to create a relief rally over the next few days into the end of the week? I think that there is the potential to do something like that, and I'll outline what that would look like on the S&P. But first, Jerome Powell. With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. So what Fed Chair Powell said on Monday during the semi-annual monetary policy testimony on Capitol Hill, and he's back for round 2 today. Or did I say Jerome Powell was talking yesterday? I feel like it was yesterday. Whatever, I could be wrong. But anyways, he's back today, that's for sure. So make sure to keep an eye out on that. And if the economy remains strong and inflation does not continue to move sustainably towards 2%, we can maintain policy restraint for longer, Powell told the Senate Banking, Housing, and Urban Affairs Committee. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks to both sides of the dual mandate, and the policy is well positioned to deal with the risks and uncertainties that we face. So it all means that the central bank is in a wait-and-see mode, realistically. It's been in a wait-and-see mode for quite some time now, and policy will be quickly dictated by the upcoming data. And on that note, right, CPI comes out. So we'll see what Powell says with this CPI information intact. And we've already seen pressure had been slightly alleviated on Powell after the Treasury Secretary Scott Bessent said that 10-year treasuries would be a focus in bringing down borrowing costs instead of Trump's prior demand to drop interest rates immediately, right, which would mean more rate cuts. And Powell had also been targeted for falling behind the curve on inflation. Remember, transitory, right? Is this transitory part 2? But it seems that the majority of lawmakers are now willing to move on and even lent him support during yesterday's grilling. It seems to me that you and some of your colleagues deserve some credit, said Senator John Kennedy, declared. And I'm not saying that things are perfect, but I never imagined that our landing could be this soft. I don't like the tone of that. I do not like the sound of that, because everyone's I think preemptively jumping to conclusions right now where markets still remain fairly fragile and we're not even coming into weak seasonality just yet. So we had a very significant move down on this CPI here. This is the volume profile in the S&P, and you can see it's left this large area of nothingness. Now, I've yet to confirm if anything actually traded through that area, but based on the data that I have, it has not. So I need to double check and make sure that there have been some trades through that area. I don't know if it's true or not just yet, just based on my data. So just be cautious of that. But anyways, it doesn't matter too much because the whole point being is that we have this like large expansive move to the downside, and what we're doing is we're filling pretty much the entirety of the auction that was left behind on Sunday. So where does that leave us? That leaves us at a target point of around 59.90 area on the S&P. 59.90 or 60.10 are areas that I'm looking at on the S&P 500 futures where the buyers can come in and try to lend a hand to the most recent upside momentum move and kind of disperse these sellers that have been hammering this thing. Now, the thing is, right, it would probably serve you better to remain bearish going into these areas, meaning that around 60.30, 60.35, you're probably looking for some of that sell side press. I might even extend it a little higher to counteract where the top of this balance from the overnight is, which puts us into 60.40 where some of that sell side can come through. I think that an immediate rally off the open to find some better sellers at higher prices makes a lot of sense to me. Under 60.70, as we talked about throughout this week, markets do remain more bearish, right? There's a failure to accept into auctions continuously, day in, day out, week in, week out to the upside. So what are you going to do about it? You're going to look for that sell side press. So I would like to see some rallies to sell into. I'm just cautious of the buyers sitting at 60.10 and 59.90 on the SPOOs. So around 60.40 area, I would want to see maybe 60.40 to 60.50. I would want to see if the seller wants to come in and tap that thing back down another 50 handles before we do find some kind of buy pressure that might be coming in at these lower prices. But I would caution people to not just like look at this and be like, buy every single dip, buy the dips, every single dip must be bought, right? Just be careful with that. So just keep that in mind that initially I think a buy side press is warranted, and then some sellers to come in at slightly higher prices. That gets completely excused if we start moving back above 60, 65 area to the upside today. If that should happen, that's where I would expect the buyer to come in and just like sweep things up. And listen, it's very far away. It seems a little unreasonable, but if you start cleaning this auction to the upside above 60.50, the potential, right, starts to stack up for them. So I'll leave you guys with that. Let's open up our live trading room. I'll see you guys all in there, and then it's Wednesday. So midweek, we take it slow, baby steps, and see what's cooking throughout the day. And